We are back on Morning Movers. Barclays boosting its price target on Microsoft this morning to 550 from 494. It's keeping an overweight rating on the stock. The firm cites strong May and June channel checks for the increase. Expects solid Q2 earnings with a good chance for raised guidance. Keep in mind, Microsoft hit an all-time high on Fridays, up more than 20% this year. Time now for Options Corner. Joining us now to take a deeper look at Microsoft is our very own Rick Ducat, lead market technician here on Schwab Network. All right, Rick, take us through this chart and tell us about the trends you notice.
Yes, good morning, Diane. Microsoft mostly in line with the broader technology sector, both of which slightly outperforming the S&P. Microsoft up about 15% during the past 52 weeks. But, you know, making new highs as of Friday there, poised to open maybe a little bit lower here today. But we can see mostly traveling within an upward sloping channel here between our two white dashed lines that came after earnings and also just after those April lows that were the significant bottom. For now, prices stuck near the +2 standard deviation channel near 510. Here's a volume node lining up with our 21-day EMA near about 496 for potential support.
Okay, and then Rick, what stands out to you when you take a look at any open interest or recent volume trends?
Sure. I mean, Friday's session, we saw volume that was about mostly between 500 to 570 on the call side, 450 to 510 on the put side here. One big trade, a 2,000 lot in the September 19th expiration. They bought the 510 calls, they sold the 510 puts, a synthetic long for an 800K debit here. For the August expiration, the range of the calls, mostly between about 400 to 550 here. The expected move is roughly plus minus 6.5% here. The highest level, though, was 440. And if you look at the puts, once again, you'll see the 440 level was also the highest for those puts. The range, though, 350 to 500 here. So that would be the general framework for this August monthly expiration here. Also quite high activity for open interest in December and January.
All right. Thank you, Rick. That's Rick Ducat, our lead market technician. Now take us through an example trade. We've got Tom White, senior options contributor and co-host of Fast Market. All right, Tom. So how do you approach this one for an example trade?
Well, I think you should be cautious, right? Because if you look at the, as far as the technical side, and Rick kind of mentioned it, the RSI, Relative Strength Index, is at above the 70 level. That's considered overbought at this point. We're above those 50 and 200-day moving averages. Pretty extended on a chart after a pretty mediocre 2024 where it lagged most of the other Mag 7 names. So they've got earnings next week. That's going to be a key event. So I looked out in the August 1st weekly cycle that's going to capture that earnings event and put on a trade that's basically neutral to bearish, but it's actually pretty good if the stock actually goes higher. You just don't want it to explode to the upside, reaching more all-time highs because it is overbought. So I looked at an unbalanced or broken wing call butterfly here, where I'm actually going to take in a credit on this this spread. So let's get the makeup of it. August 1st weekly, we're going to buy one of the 515 strike calls, sell two of the 520 strike calls, and then to make it risk-defying, buy one of the 535 strike calls on this trade. You're going to collect roughly a credit of about $2.20. That's going to be your profitability, what you can make if the stock remains below that 515 level. You can see here, you just keep that credit that you collected on it. Now, if the stock moves higher, goes to that 520 strike, you've got your short two options there. So that's going to be the apex of profitability on this type of trade, right at that 520 strike where you sold two options. Now, if I collect that 220 credit, where's my break even? Where do I start losing money on this type of position? That's going to be all the way up at 527.20 to the upside. That's going to be about 3.5% to 4% above the current share price in there. Stock looks like it's going to open up around 507, 508 today. So pulling back from those record highs. And I think one of the key things with this type of strategy is, yeah, you've got a lot of risk, but that's all the way above the 535 strike to the upside. So you could actually be wrong on this neutral to bearish type of position and still profit more on it. So the option market pricing in about a plus or minus 3.5% to 4% move in the stock post earnings. That's about $20 either way on this one. So that break even sets up with what the option market's priced in here. But this might be one of those strategies you can look at and say, hey, I can be wrong on this stock and continue to move higher. I just don't think it's going to explode to the upside.
Okay, well, I'm glad you brought an example trade within the tech sector. That's an example trade for Microsoft, especially given the focus this week that we'll have on tech with some of the Mag 7s starting to report this week. Thank you, Tom.